scalper or think about scalping, then this video is for you, because in this video we will talk about how you can scalp the 5-minute time frame, which can give you the more entries and also the more targets. But it doesn't mean that you can be more profitable as compared to other traders, because scalping means that you are looking for a short move that can you ride almost every day. Now, first of all, we can see that this strategy can work almost every day. And if you double click on the candles and move to the events and open the session breaks, then you can see that all the lines, these blue lines, are the price action in a 1 day. And you can use this strategy every day at any time, 5-minute time frame, because if you move to the higher time frames, then it will take much time for market to create those structures. Now, you can start from any day, like from anywhere, like if we can start from this point. Now, how we can do the scalping? We will only wait for the market to grab the liquidity. When market is in the upward trend, we will wait for the market to grab the liquidity of the previous lows. Like this can be the trend line liquidity at this point, or this can also be the support or resistance type of liquidity, something of this nature. And when market grab all these kinds of liquidity and tap on any unmitigated order block, then you can look for a buy. And if you want to take the extra confirmation, you can also move to the 1-minute time frame for the confirmation entry. But if you want to take the direct entry, you can also take the direct entry in the 5-minute time frame. Like at this point, market creating higher highs at this point, so you know that market trend is bullish. Now, at this point, as you can see that this was a trend line for me. From this point, you can see that this is the trend line. Market was respecting the trend line, and the people who have bought based on the trend line at this point, they all get trapped by the market in the form of liquidity, because they think this is the bullish candle, now market should go to the upside, and this is their stop loss. Now in this way they all get trapped. But what market did? Market grabbed liquidity of all these trend line traders, and also this liquidity created by the market, and tap on this unmitigated order block, which is at this point. Now, when market tap on this point, you can look for a direct buy, or you can also wait for the market to tap on this unmitigated single candle order block, which is at this point. And you can also trade this based on the tight stop loss, or you can also put your stop loss just below these lows. This is your personal choice. And you can target the recent high, which is this point. Now, this is the trade that you can take. Now, you do not have to wait for the more trades in this day. This is a short move, but you can make a 1:5 RR, 5.5 RR trade. And as you can see that market moved to the upside, and it also gave you another trade. Where is another trade? As you can see that market swept the liquidity of the previous highs in the same day. Now it means the liquidity has been already grabbed, and you can look for the sell. So when you can sell, you can look for a sell based on the unmitigated order block, which is this point, but this is secondary. And you can also sell based on the order flow, which is the last up move before the down move. And this candle, as you can see that, tap on this order flow, you can look for a sell at this point, and put your stop loss just above this point and target the recent lows. Like first target can be your at this point, next can be at this point, or the previous low. And as you can see that on the next day, this strategy again repeats. Now, how you can next day buy based on the same strategy? Market was creating higher highs and then it shifted to the downside at this point because market closed below the previous low. So this is your change of character, and after the change of character you can wait for the market to grab the liquidity. Like this is the engineered liquidity in the market. Market grab this liquidity, tap on the imbalance. Now this is the imbalance. At this point market tap on this point and also created a single candle order block, and you can trade based on the single candle order block. Also put your stop loss just above this point and target the recent low. This is the only thing you need to do. Now this is the first trade that you can take using this strategy, and again market swept the liquidity at this point and move to the upside and tap on this unmitigated order block. This is the unmitigated order block. Market tap on this point and you can again look for the sell entry. And if you don't want to take the lower time frame entry, then this is your single candle order block based entry. Put the stop loss just above the high and target the recent low. In this way you can take this trade. And again in the same day, as you can see that market direction was bearish at this point. Now what you can do at this point, that direction in the 5-minute time frame shifted to the upside, so you can look for a buy. So when you can buy, this is your unmitigated order block. Now even though market tap on this order block, but as you can see that it didn't create a single candle order block, so you can avoid this trade. But if you take this entry, this can be your loss. Now again market shifted to the downside when it moved below this point, so you can again look for a sell. So when you can sell, when market grab the liquidity, and this point is the liquidity. Now at this point market grab the liquidity and didn't create any single candle order block, so you can avoid this trade also. Again market next day move to the upside, and as you know that market has shifted to the downside, you can again look for the sell entry. So market moved to the upside and the market direction was to the downside, so you can again look for a sell. So when you can sell, as you can see that this was your order flow, market didn't tap on any of the order flow, so this is your missing trade. But if you want to take the lower time frame entries, you can take the lower time frame entries based on this point. And if you want to take the direct entry when the order flow breaks to the downside, so this is your direct entry, this is your stop loss, and you can target the next low which is at this point. So this was your trade on the next day. Again market moved to the upside, swept the same high at this point, as you can see that, and again swept the same high at this point. So you can again look for a sell. And if you sell at this point because on the sweep of the previous high, then this is your stop loss hit. If your stop loss was just above this high, but if you have put your stop loss just above this point, then this is your trade and you can target these lows, and this can be your target. Again market moved to the upside on the same day and didn't swept the liquidity of this high, but it mitigated this unmitigated wick which was at this point. And based on the single candle order block, this is your entry at this point, this was your entry, this is your stop loss, and you can target the next low again. In this way you can trade almost every day. This is again, as you can see that market was in the upside movement to the counter trend, but again market shifted to the downside in the internal also. This was the liquidity, market grab the liquidity and tap on the unmitigated order block at this point, so you can again look for a sell at this point. This is your entry, this is your stop loss, and you can target the recent lows and also take partials when market dropping to the downside, and this is your final target. Market again hit your TP, and in the same way market again break above this high, so liquidity was swept. This was your second trade in the same day in the scalping, and this is your entry, this is your stop loss, and you can target the low. In this way you can trade almost every day, and you need only 5-minute time frame and direction for the scalping, and this is one of the easiest strategy to trade, and you can practice it on your own chart. And if you have any doubt, you can comment below and I will make another video for you. So thanks for watching this video.